So just here recently, I had a really good friend of mine, a friend within YouTube, Ryan Scribner. He hit me up and he referred to me as the grinder. And I had to laugh a little bit. I sat back and it was really kind of funny, really funny, because he struck a nerve with me, because that's a pretty good compliment from somebody like me. Because I kind of know how to work in the trenches. I'm a pretty hard worker. I learned how to learned my work ethic really young, in my late teens, when I was a commercial fisherman in Alaska, and going to college at the same time. And anybody who's done that nature of work, certainly I can stand here firmly and say it's one of the hardest jobs that you could ever work, and that's a lot of where I get my work ethic from. So when he referred to me as the grinder, man, I couldn't help but just kind of smile a little bit and say, yeah, I pursue things with some ferocity, especially when I believe so intently or intensely about the subject that I'm talking about. And there is no subject out there that I'm more intense about than finances. It's my very favorite topic. And I'm just trying to come out with this channel to portray to you guys what it is that I do, with the intent of empowering you guys one investor at a time. And I believe we're doing that. Guys, welcome to the Independent Investor Channel. My name is Ryan. We're coming to you from New York City, New York, the Big Apple. On this particular channel, I want to talk to you guys about how to work in the trenches. You know, a lot of the times when you're turning into YouTube, all you really kind of see is the glamour. You really do. You know, what 3 stocks do you buy per month? You know, how do you invest in the stock market? If you had $1,000, how would you invest in the stock market? When you take that advice and you're looking to employ it on the ground level, it sometimes misses muster. It really does, because you're like, gosh, I just watched that entire video. I kind of had an idea while I was watching the video. Now I forgot it all. What do I do, right? And I think a lot of what you guys are maybe missing is some of the behind the scenes. I'm interested in financing and investing, especially stocks, okay? I spend a lot of time watching. I have a very good impulse about the market. I really do. I look into a lot of analyst reports. I do look at technical analysis. I really do. But at the same time, with all that stuff put away, some of that stuff I really do just because it's genuine interest, okay? But when it comes down to actually taking a position in a stock, how is it that you guys draft up scenarios and maybe run a scenario through and say, you know, I've got X amount of dollars and here's the 3 stocks I'm looking at? I'm going to tell you, outside of just jotting it down on a piece of paper and taking and writing my 3 stock picks and running it through a scenario to say, look, if I were to buy 10 shares of Apple, if I were to buy 8 shares of Home Depot, if I were to buy, 10 shares of JP Morgan Chase, what are we looking at on the bottom line? And I'll actually have a calculator there, and I'll be running through those scenarios, and I'm saying, okay, we got a little bit too much here, or I'm a little bit over budget on, let's say, my $1,000. And that's kind of how I do it. I'll run the scenarios through until I kind of match up that perfect mix. And this is what I did when I first started, okay? When I first started, it was kind of like, okay, I'm researching these stocks out. What is it going to mean for me to take a particular position? How much should I buy? You don't know when you first start. And I do have certain kind of recommendations for you guys that I've talked about on previous videos, about if you had $1,000, should you really be entering into the stock market in individual stocks? If you had 5 or 10,000 or 25,000 or 50,000, it would probably make you a little more eligible to enter into some of those more advanced positions and start to build upon a foundation. So when you're first starting out, the very first thing that you could possibly do is make yourself aware of the market, all right? The number one thing that I find that is deficient in people is that they just don't have a general awareness about the market. Now, a lot of people have more awareness than they think they do. They really do. I've played this scenario many times when I'm in person with people and they're like, I just don't know what to invest in. I have no idea. And I have them turn their cell phone over, and there's the Apple on the back, and it's like, okay, wow, that's a good investment idea. In my opinion, it's the best investment idea, right? So if you go home and you start grinding the numbers, right? And when I'm talking about being a grinder, I'm talking about getting into the analyst report, looking at where the stock has been throughout the year, where it is currently, what it's currently trading at, what its PE ratio is, those certain things. Those are all important things. They really are, just from an awareness standpoint. But at the end of the day, investing in Apple stock is a good move, okay? It's a good move. You could make that rationale for a lot of different things. If your cell phone carrier is Verizon, great example. If you go to Home Depot all the time and you understand and you're looking around at how busy they are all the time and how good of a retailer that they are, that's a great investment. Costco, the last time you were at Costco and you paid attention and you were like, wow, this is incredible. Or the last time you were at Walmart. Guys, these are all ideas that if you just look at it from a different perspective, these will all get you where you kind of need to be. And I've done videos on starting with the Dow Jones Industrial and working your way back, guys. There's all the best stocks are in the Dow Jones Industrial, the S&P 500, the NASDAQ, and the Russell 2000. You can cover the entire index by just looking at those stocks. But for entry-level positions in the best of breed stocks, you really don't need to be looking that much further than the most obvious names. The most obvious, honestly. Some of the names that I've entered into in the obvious names, I'll never sell them. Never. That is my core of being an investor, is that I've entered into manageable positions in these stocks, set them up for dividend reinvestment, and allow those stocks to kind of grow going forward. Why do we do that, okay? We're talking about grinding, right? I'm a hard-working guy, okay? I'm a working class guy. I make less than the median income in the United States. I have to find a side hustle, all right? I have to find it. For me, and for a lot of people out there, the stock market can be just that. So instead of thinking about your 10-share block of Apple as being $1,500 that you can't spend because it's invested in Apple, think about it in a different way. Think about that 10-share block of Apple as its own money machine or its own business, right? And let's say you compound that and you have a half a dozen holdings in your portfolio, all growing under the self-directed Roth IRA envelope, and each one of those is its own entity, is its own business. And each one of those, as the shares appreciate and depreciate over time, it's going up and it's paying you back. It's paying you dividends, and each one of those is kind of its own little business in and of itself, all right? So kind of think about it that way. But when you're taking these ideas, you know, from just paying attention, and you get these ideas, maybe let's say from me, because I really don't stray away too far away from recommending the best of breed for you guys. I really don't. There's no real reason to not look for, you know, a dividend that's been paid out for the last 50 years. There's no reason to look a whole lot further than Johnson & Johnson, Pfizer, and Merck. There's not. You guys can get into biotech if you want, but don't come crying back to me when it's been cut in half 50%, okay? All right? You have to look at this from a fundamental perspective, right? So when we're looking at a Johnson & Johnson and you're saying, you know what, I don't really understand a whole lot of this, but I understand that enough to know that Johnson & Johnson's been around for 100 years. I'm going to enter into the position. How much stock should I buy, right? Let's say you've got $5,000 to start. And you play these scenarios and you say, okay, being a grinder means that you could take any sum of money. I'm really good at it. I can take $5,000, I can split it up and say, okay, we're doing $2,000 over here in a passive long-term ETF or index fund, and we're gonna add 2 stocks to this account to start, and we're gonna leave, let's say, $750 in cash. How do we do that? Okay, well, the $750 comes off the top. Remember how I told you how to be a grinder? Get that pad of paper and that pen, right? That's how Bob Dylan wrote his songs, okay? They ended up on a scratch paper or a napkin, right? And over time they got printed to paper, right? You have to be able to take something from an idea to something that is reality. And so many people cannot do that. You cannot envision just taking an idea and actually implementing it and putting it into, let's say, the business structure that I talked about when you're setting up each one of these blocks of stocks to pay you back in the future. Each one of them is its own money machine, is its own little block of business for you guys. And over time, the returns on each of these individual blocks of money can be insurmountable. They can be very powerful, very powerful. And for you guys that will never own a personal business, or those of you out there who are striving for success, but will never achieve riches, guys, this is the way that ordinary people can participate in success and can participate in owning their own business. Investing in and of itself is a form of an individual business. It really is. It really is. That's what it means to me, okay? So when we're looking at the grinder portion of it, and we're looking at really getting into taking a 10-share block in Apple or an 8-share block, you take the 8 shares times the common stock price, right? So basically you're starting and you're jotting it down. 10 times the current stock price, which is 165, and this is going to equal 1,650, right? Okay, and this is what we're doing. We're grinding this out on our paper, and we're saying, okay, we're going to put 750 in cash, right? All right. And we're adding this up here, and we're coming up, and we get our bottom line, and we can say, okay, we can adjust this up, and we're not going to do 10. We're going to do 12 here, okay? Or we're going to reduce it, and we're going to do 8, and we're going to grind these statistics out here, and we're going to play with the numbers to get that number that kind of makes sense for us. I don't just randomly come up with an arbitrary figure on what amount or how many shares of stock I'm going to buy. This is how I do it every single time. And that's why when I was referred to as the grinder, I was like, that's exactly correct, man. That's exactly right. I'm grinding the numbers to make sure that I have a bottom line plan to say, you know what? When I initiate my stock buys for Monday morning, and I'm lining these up to take positions in each one of these stocks, I can set them up ahead of time, and I know exactly what dollar amount and what number of stock I'm going to buy, and I can put those positions in place, right? So this is kind of how it affects my buying and selling. Now, when he referred to me as the grinder because I put a lot of videos on YouTube and I don't have a lot of views yet, and you know, I've got a few subscribers, you know, around 1,000. I'm stoked about that. That's fine, but I don't really care about it because I'm going to grind my way to 500 videos. I don't really care and see how many subscribers I have then. That's fine. I have no problem with that. But the buying and selling piece to it, I've sold stock prematurely a lot of the times because the way I would do it is if I have profits in my account and I can safeguard money and take those profits, I'm basically skinning the account over time, right? Or I channel the same stock over and over again. I must have sold Marathon Oil probably 12 times throughout the course of 2017, and I made money every single time. Grinder. That's how grinders do it, guys. And I'm trying to get you guys to understand the potential of grinding out your money and earning your way forward, because this is something that anybody can do. Anybody can do this. All I have for this particular video, it's really just kind of get you guys some insight really on where I'm coming from in my history. You know, I did commercial fishing for 7 years. And if there's one lesson that I really learned out of that, it's to understand that when things are down, right, to keep on pursuing, you know, your goals. We had a saying on the boat, it was stick and stay and make it pay. And I employ those same strategies in investing, and it really kind of helps me stay grounded, it helps me stay focused, and it helps me understand the premise that there is no substitute at all for hard work, and especially in the stock market. Guys, thank you so much for tuning in to the Independent Investor channel. Hit the subscribe button at the bottom corner of the video. You'll be notified of future videos that I put on YouTube. I appreciate your guys' viewership. Leave your comments at the bottom of this particular video. Share the video with anybody out there that you know is looking for some stock market information. I'd be glad. Turn them on to the channel. They get some great information here. Guys, thank you so much for tuning in again, and good luck in your investment future.